Back again with some real estate tips from Team Ruggles at Atlanta Communities in Cartersville, Georgia. Some things I want to go over. Basically, one is I want to say thank you to all our past clients and the clients that we're working with now. Appreciate you trusting us with your real estate needs and letting us help you find your home or sell your home. We really do appreciate that. Two, my presentations, I do have visual and I am audio because some people learn differently from others. Some are good with audio, some are good with visual, so I just put both in here, and that's why I do these presentations like this. All right, so tips. Last week we talked about FHA loans and explained how to get approved for those, what the standards were or stipulations in order to get a FHA loan. And one of the vocabulary words that we had, or vocabulary phrases, was debt to income ratio. And I promised I would go over that this week. So that's what we're going over. All right. So debt to income ratio, understanding how lenders measure your debt compared to your income. Okay. When you go to a lender, all right, they're going to look at your credit score, everything. They're going to look at your bills and everything that you have that you're paying out. And one of the big decisions with underwriting is your debt to ratio or income ratio. All right, so it measures of how much of your monthly income goes towards paying your debts. So when you bring home a paycheck, how much of that is going to paying bills, loans, and so forth. It's used by lenders to assess your ability to handle new credit, okay, and expressed as a percentage. So here's the formula, and this is how they calculate it. Debt to income ratio is equal to total monthly debt payments divided by your gross monthly income times 100, all right? There is net income and gross income. Your gross monthly income is defined as total earnings that you get without any deductions made. All right, so it's previous deductions such as taxes and so forth. All right, so it would be what you actually have as your salary or income for the week, month, whatever. Okay. Now your net is going to be what you actually cash on your paycheck. All right, so getting into that, all right. Debts include some of the things that they look at are mortgage or rent. If you already have a house, your mortgage. If you're not and you have a rent, then your rent. Car loans, student loans, credit card minimum payments, personal loans, other recurring debt obligations. So it's credit card minimum payments, not the whole amount that you do have to owe. They're looking at a monthly income and then a monthly payout, all right, that you have to pay out. So they can see if you can handle a new credit. So, for example, mortgage is $1,200, car loans $300, credit cards you have $200, student loan $300. Your total debt is $2,000 a month. Your pay is $6,000 a month. That's before any deductions. And so your debt to income ratio is going to be your $2,000, your debt, divided by your total amount that you get paid per month, and you multiply that by 100, and that comes out to 33%. So what are the lenders, underwriting, so forth, looking at? Okay? They want it below 36%. Anything below 36% is good and manageable. All right? 36 to 43%, it's acceptable, but may raise some questions. So they might have to look into something else further. All right? Above 43%, harder to qualify for loans. And at 50+%, you're probably not going to get a new credit or new line of credit or a loan. Okay? You definitely have to work on getting rid of some of your debt. Okay? So those are what they're looking at when you take all your information to the lender. So I hope this helped with understanding debt to income ratio. Next time I'm going to start talking about the different types of loans, secondary loans that you can take out. The first one we'll talk about is a HELOC, and we'll go over all that information. But Team Ruggles, Atlanta Communities, serving Bartow, Floyd, and Gordon counties in Georgia. The office number is 770-240-2000. Gives you a directory. You can either contact my wife, Kim Ruggles, or myself, Eric Ruggles, and we can answer any real estate questions or needs you have. Again, thank you to our past clients. Appreciate everything, and letting us help you with your real estate needs. So next week we'll talk about HELOC. If you're on YouTube watching this, part of my channel, please subscribe. I'm looking to try and build up to about 100 subscribers, and I'm going to try and continue giving tips, real estate education, and my channel will have a few other things on it, but you will have the playlist denoted to real estate, and you can look back at those videos. Thank you.